All right, hello everybody, and happy weekend to you all. This is Wes with Pikes Peak Trades, and excited as always to bring you a stock market update for the week of trading that ended Friday, March 26, 2021. And as usual, we're going to take a look at weekly charts, but also approaching the end of the month, we're going to look at some monthly charts, and we've got to talk about the surge that happened at the end of the week, especially the end of day on Friday. And was that enough to say with some certainty that the bulls are out of the bear woods, so to speak? And I want to show you the balanced evidence on both sides. I want to give you some possibilities of what I'm looking at. So we first have to acknowledge just obviously that with the end of week surge, we got a new all-time closing weekly high and a new all-time closing daily high on the S&P 500. Now, that in itself is viewed as being bullish, but there are some evidences of divergence that I need to point out, and I've been pointing out to you on the RSI 9 that continued weekly divergence, and it is certainly noticeable. So we have to keep that in mind. In addition, what I also want you to take note of is quite a sharp divergence here on the NYAD. So we're looking here at the accumulative advanced decline line of the New York Stock Exchange, and you can see we are well below the all-time highs that were put back on March 15th. So I bring this to your attention to say, if this cumulative AD line cannot surge to new all-time highs within a new bullish leg within the S&P, I think we're looking at the likelihood that we could potentially still have significant selling. Now, the count that would enable that to occur is absolutely in play, as are the bearish counts if we cannot see this cumulative advanced decline line make a new all-time high. What I'd also like to point out to you is the NYMO. So looking here at the McClellan oscillator, you're going to notice that it closed below zero. And if you go back and look historically, after you've already had a leg of selling, if the markets have been unable to clear the zero line, and certainly the plus 20 line, that would also be looked at as non-confirmation of any new highs. So if the plus 20 mark on this NYMO cannot be cleared with momentum, if stocks continue to move up, we need to be looking at as non-confirmation, and we need to be ready for potentially some bearish legs. Okay, so let's start getting into some of the individual counts, and we can look first on the monthly as we approach the end of the month of March. There is no divergence on the monthly. Now, some of you may be like, well, wait a minute, what about all the way back here in January? What about that divergence at the end of 2018? Isn't that valid? And I would say to you, no, it is not, because I believe that 2018 to March of 2020 was actually an expanded flat cycle degree correction. So that actually reset the monthly RSI. You'll notice there is no monthly divergence, at least as of today. There's only 3 trading days left in March, but as of today, the monthly candle is very healthy. It looks, in fact, even a little bit like a bullish monthly candle. We have to see what happens, obviously, for the end of March, but so far the uptrend is well intact, and you're going to see this is probably a conservative target around 4,300. My target that you'll see on the weekly for the S&P 500 is actually at 4,600, or even higher if one of the upper trend lines would be tagged maybe by the end of summer at around 4,900. For now, if we get bullish resolution, I think 4,600 is a good target. Okay, now of course you're going to notice, what are those potentially bearish counts? Well, if I drill down now into the daily, I think what we really have to be on guard for is a brick wall rejection at that psychological number of 4,000. And the bearish count that would cause that rejection here, I think, would be an expanded flat here in blue, where we've seen an intermediate top, we've seen a three-wave move down. We've seen now the makings of a three-wave move up into this X wave, and then we would see another three-wave tumble down into probably at the minimum below 3,700, but maybe all the way down into the 3,500s. That's, I think, what we need to be on the lookout for, especially if QQQ and IWM cannot make new highs, which we'll talk about here in a bit. So getting you more into the short term, I also want to point out to you the very real possibility that we get an explosive move to the upside. And that's what you're going to see here in purple. So what if the flagging action right here in the early part to mid part of the day on Friday was just a 1-2, and we are in the most bullish 1-2-3 setup of this entire what here would be a minuet wave 1. Okay, now that possibility is absolutely there if we blast off. If that happens, we need to be seeing what I mentioned earlier, the NYAD line and the NYMO make new highs. If they do not, we've got to be on the lookout for the potential of this X wave, which can actually extend all the way up to about 40-60 if I put this in to the 1.62 extension. Okay, so lots for us to look at. My primary count is actually not that bullish blast off. My primary count is that we will challenge 4,000, but that this is in a sub-degree fifth wave that would then give us a buyable pullback, and that would probably be retesting maybe the lower to mid part of this channel that it looks like price just broke back into on Friday. Okay, let's take a look here. That was futures and just the cash market. You're going to see a very similar count. Here is what I'm calling for, possibly a stalling on a gap up Monday at 4,000, and then a very buyable dip if it will hold and backtest some support. Now, what if we just sell off immediately? That is totally possible, and if we have a gap down Monday, this X wave is in, and that would put the X wave here just beneath the all-time high at about an equal leg of leg W. And then in that case, we're starting what would be a massive sell-off, probably a three-wave move that would take us well below 3,700. Okay, so we still have lots of divergent counts to think about. We do have the ability, though, to use other evidence besides just price to give us some confirmation. Okay, let's take a little bit of a long look as well at the QQQs. And what I want to point out on the monthly chart is right in here. I wanted you to see a lot of time here because this candle that ended the month of February is confirmed now as a shooting star. And it's confirmed because we had lower lows here for the month of March. Now, if you look back at almost all of these other confirmed shooting stars, typically there's more than 1 month of selling that follows. Is it possible that we could only have 1 month of selling here in March and then get resolution upwards to try to make up for that shooting star? And there is some evidence. Go back in here, all the way back to the end of what I have as cycle 1 here on QQQ. We had, at the end of July 2007, a shooting star that actually turned into a bullish hammer that led to a couple more months of gains. It is actually possible here on QQQ that if it closes above 319.27 by the last trading day of March, we could also get a monthly green hammer candle. And that is absolutely what the bulls want to see. Okay, so by trading days, when does that need to happen? Well, that would need to happen by Wednesday. So if by Wednesday we see QQQ above and we get a monthly chart closing, let's say 320-ish or higher, then we could say there is a good chance we could see some continuation. Otherwise, as you're going to see on the red count, we could be entering into a period of more rapid selling. So a little closer look on the monthly. Here's the potential of a March green bullish hammer. It already looks like a hammer, but we really want to see that green close to really try to make sure that that shooting star might not have the power to continue to sell off. We get in here to the weekly. Now you're going to start to see the development of a little bit more of the bearish count. We did see for the week a lower high and a lower low. Now, because of the end of week surge, that although Qs didn't surge, what they did was quite important. They did recapture the 13-week EMA. Not quite able to get the 8-week EMA, but it is right there in range for a big bounce off of this area. Now, digging a little bit more into the daily chart, we'll see the development of that count in what I think is a 1-2, and the bullish count would have it ready to blast off to new all-time highs within this wave 3. Now, I'd indicated, can S&P 500 set a new all-time high without Qs or IWM? Absolutely. Notice how far we see QQQ beneath its all-time high. So some suggestions for what to look at. The high of this red 2 at 321 needs to be broken first. And we could probably say with some confirmation due to how the bearish count would be nested. If 324.2 breaks to the upside, the most bearish version of this count is actually eliminated. Okay? So that's kind of 2 levels on QQQ that we're going to be looking for. Notice on the daily, it is right near this volume point of control, right at this volume shelf. If we're going to get the blast off, this is where it's going to happen. Notice the clustering of the daily MAs. So all of that, in addition to being close to the top of this down channel, it's there for the bulls if they can make it happen early in the week with some momentum. Getting you into the short term, let's also take a look at Nasdaq, because that potential of a very, very bullish move is there, and that would be taking it up to a new all-time high. And I think that blast off would occur because I haven't shown you the sub-degrees, but I think it's a nested 1-2, 1-2, 1-2. So we're looking at a 3 of 3 of 3 that if we see the bullish resolution, I wouldn't be surprised if Monday is very, very powerfully green. Now, on the flip side, why the divergent counts? Well, because there's the possibility that what happened at the end of the week is just a bear flag, and it's a trap for the bulls, and we actually could tumble. So because of that, I did not position myself aggressively. I was surprised at the strength of the move up, especially I think in the S&P. But because of what I was seeing as the possibility of some non-confirmation, I'm very happy to wait and see what happens on Monday and Tuesday. Getting into the QQQs, you're going to see what might be conservative for the bull side, but I think just within a micro 3, maybe a pullback to test that breakout, and then maybe a resolution here with a little bit more of some chop. But of course, like I indicated, it is absolutely possible that we see an early blast off passing this confirmation area and passing this area here. 321 and 324 is what the bulls want to see. Okay, so now let's start taking a look at Iwm and Xlf. And what I think happened over the last couple of weeks is actually very, very significant in that the markets realigned themselves. So let me try to explain. Through a lot of January and Feb, you saw financials and small caps make a big run. We didn't necessarily see the enthusiasm in tech and growth. And then when the sell-off hit, it hit tech and growth first, but financials especially stayed up and stayed strong. What the recent selling has caused everything now to get into a line. Either we are ready for a massive coordinated move up, where we've seen selling in small caps and financials. We're ready for a coordinated market blast off, or we're ready for a coordinated market sell. And so I think that that was actually very significant, what has happened recently. And you're going to see in IWM, my black primary count is that we're not done. You're going to see here on the weekly chart what looks like a weekly bullish hammer just beneath its 8-week EMA. And if I take you into the daily, you'll see a little bit more detail of just how much room I think small caps still have to go. Now, like the S&P 500, I think there's a chance that we could be seeing an X wave if this doesn't resolve bullishly. Now, most likely what would happen is the S&P 500 would go ahead and make a new high, but IWM would not. And if it stalls within these fib areas here and then reverses, that's going to be some evidence that we might actually see another down leg of selling. So getting into the shorter time frames, right in, let's say, the 224 to 228 area, if that's where it stalls, that's where we could say that we got to have a little concern that maybe we're actually seeing that X wave as well in the S&P 500. Okay, now of course there is also the possibility that we just have nested ones and twos and we're going to see that blast off, but Monday and Tuesday are crucial for helping resolve this. Into financials, and like with small caps, we did see a sell-off of that together, but then a recovery. A recovery here, and financials are still very, very strong. Looking into the daily, we got a 34 EMA touch. We got a lower rail touch, and once that happened, we saw on Friday a strong move up in financials. So I'm giving that as part of that move, finishing up an intermediate leg 3 that we are just working strongly up into finishing a 3 of 3 within that move. That would certainly be the bullish case, but the bearish case again is that whatever might happen for a gap up on Monday could be sold. And so we have to be very, very aware of that possibility that this is just an A, B, C down, similar to IWM, which would be a WXY down of its more bearish blue count. Okay, some individual names, and I had talked about the divergence that was evident on the S&P chart. I want to use Tesla's weekly chart to just show you how long that can play out. It can play out for many, many, many weeks. And Tesla has been putting in a very interesting pattern with its RSI. Going back to the end of 2019 into early 2020, 9 weeks of overbought RSI, followed by roughly 9 to 11 weeks of resetting, okay, where price was beneath the previous high, as you can see from 194 in here towards June of 2020, and then 9 weeks of overbought, another 9 weeks of cooling off, another 9 weeks of very aggressive price action, and have we just repeated another 9 weeks here of a reset? That's what I'm suggesting for the bullish case. And I wanted to circle for you the similarity on both RSI and the stochastics for what is happening from November until now. So if that is what we're seeing, then we're just seeing this period of selling and consolidation in Tesla, and we have one final push yet to go. So another 9 weeks, try to move that RSI back up, would put Tesla in a final leg of this bull heading into the summer. Okay, now digging into the details on Tesla, we're going to see here a potential bull flag that has been hit 3 times on the low end. We had a spike down out of it, but a recovery at the end of day on Friday. It's still well beneath all of its MAs. So by no means is this a healthy chart. The speculation is that we're ready to kick it off into a wave 3 to try to get those MAs back and recovering. Now, of course, The bearish move would be that we get a little bit of up movement, but it fails. And you've seen that on the other indices. So we have to be aware of failure here around maybe 720. Certainly here we're looking at this 50-day SMA at about 750 that also could cap this within these more bearish retracement fibs. Let's take a look at Apple. So Apple is lagging, and we're looking here on the weekly, and we see here certainly a lower high, lower low. It's beneath its important weekly MAs, and it's not counting well impulsively. So I had even tweeted this out, that some frustration about Apple, that a bullish leg up from 116 to 127 is actually, it's a little bit difficult here to try to count. So I'm leaving the possibility here, and this was suggested from some other waivers that have just been awesome in sharing their thoughts, that possibly even if we see new all-time highs in QQQ, that Apple doesn't actually go. So it might just be putting in a three-wave corrective move into the summer without actually making an all-time high. That would absolutely be something that we would look as a non-confirmation to say that we could be seeing at that point a very significant top in QQQ if we do get a run-up through, let's say, May, June, or July. Into its more specific counts here. And I want you to just see the difficulty of this. It doesn't count well impulsively. To try to get 5 waves out of this, I kind of had to squeeze a 3 and 4 here before the top of that minor wave. Obviously, anything more bullishly. Let's get through the rest of big tech, because I think we do need to see the rotation back into growth in tech. And here's Amazon. Now, Amazon's weekly candle is an outside red candle. So I'm leaving in the possibility on Amazon that we could just see a bear tumble. And so we've got to keep an open mind. We certainly can't just be blindly bullish just because of the recovery that happened at the end of the week. Moving into the daily, you're going to see that count as a possibility, that we still have the potential of a 1-2 red 3 down. Okay. Now, the upside is that possibly we had here a bullish hammer recovery on Friday, and we're just kicking off these minute waves to try to get Amazon back towards all-time highs. And if you're curious about, what would an entry look like, my recommendation would be to buy the pullback. And I've said this many, many times on Amazon. There are always pullbacks on this name. So I'm looking for resistance at about the 3080 to 3090 area. That's pivot resistance and MA resistance, with a test back to this channel before I would even consider trying to play Amazon again. Okay, let's look at Facebook. And Facebook has been one of the stronger names. The previous week, it sold off pretty hard. This week, I have it trying to finish up a 5th wave within its minor 3. And so we get into the short term there on Facebook, and we're going to see something really important. We're going to see a bouncing the middle and the end of this week right at this really important 277 to 278 pivot. You can see a price touch here, a hold here, a few holds here. And if it can get up and move out of this potential bull flag, so moving up and out back into this channel, I think we could see a really strong run on Facebook towards new all-time highs. So how about one that is just kind of strange, and that is Google's chart. So here is GOOG, and we're going to be seeing just a long, this is more than a month long of just rectangular consolidation. Is it ready to break? Well, it certainly is just perched beneath its clustered MAs. It had back-to-back days of touching on its 50-day, and the last time those were all clustered, it had some pretty explosive moves. So I would actually be pretty interested in playing Google here. Its correction has been kind of nasty to chart. I've got it as a triple zigzag. And again, similar to Facebook, if it can work itself out of a potential bull flag here, I'm going to be interested in getting back into Google because it might have quite a bit of catching up to do if we see resolution here in QQQ. Okay, I want to take you through quite a few other individual names. So Boeing is one that's really recently caught some attention, and I want to draw you to this trend line from its all-time high through what happened here in recent uptrend high. And since then, what I think Boeing has been doing is just resetting itself and getting itself ready here for another run. So I've got this within a bull flag, looking like it's potentially about ready to break out. What we've got to be aware of is price at 229.61. We don't want to see that break. If that breaks, then I'm forced to recount this as an intermediate 3 that goes here, a 4 that goes here, and that suggests that it would only have one more bullish leg up. And that could terminate right around 280, and that would actually end this potential cycle here for Boeing. Want to take a look at Netflix. I still really like Netflix, and we're going to see on Netflix a close on Friday that just recaptured its 200-day moving average. Taking you into the details. So this potential bull flag that got tested 2 times, and right in the last hour of trading, just an explosion out of that. So I still have very ambitious targets for Netflix. I think it could be a name that does great if we see the resolution in QQQ. Okay, also semiconductors. I like AMD, I like Nvidia. Going to show you Nvidia, potentially the establishment of a new bull channel with a 1 and 2. And for the shorter term counts here, I think it could be within this wave 3 of a minute wave 1. And certainly looking maybe for resistance here on the old broken trend line. If it tags it and retreats, I think that would be an entry to try to catch it moving strongly back into the mid 500s. Okay, so want to show you some important growth names. They were some of the growth darlings of 2020, have been extremely beaten up. Could we look to some of these for some bottoming signs? So here is C Limited. And we saw this week a tag of its 34-week EMA and then a recovery in the form of a hammer candle. I want to show you the divergence on the daily. So we look at the closing low of March 8th versus a lower closing low on March 24th. And this on the RSI 9 is 2 weeks worth of divergence. That is typically good to set a significant low. And I have that as a minor leg, and we're looking for the establishment of a 5-wave move up to all-time high. So I am optimistic that SE and almost all of growth will recover to set potentially some new all-time highs. Now, I would point out to you, I think you're actually going to see this a little bit better in TDOC, the possibility that it doesn't make an all-time high, but we still get a nice bounce. So even if we don't set the new all-time high, we could be getting a B-wave bounce before we actually see a cycle low. On the short term, I think a move to challenge this gap down area, right in the 220 area, that could be a place to watch for some cooling off. I'm always interested to try to catch that higher low wave 2. And so I'm going to be patient on SE, but try to catch that higher low wave 2. Okay, last set of individual names that I'll take you through. We can start this one with Microsoft, and I can show you Microsoft's weekly chart here. So Microsoft, a very healthy weekly chart within big tech. It is above all of its MAs. I think we saw here higher low, higher high, and I'm optimistic that Microsoft could really move. I love this daily bullish engulfing candle, not completely an outside candle, because we did have a slight lower low, but not quite a higher high. But candles like that are typically followed through. So we see it here in the short term. And we're going to notice again a potential bull flag. Well, now this is confirmed, as a bull flag break. There was your back test. I think we just saw some sub-degree moves, and I have the potential of Microsoft within this wave moving up to a new all-time high. This bearish algo right here, this 0.618 fib, that's what needs to be captured. It could do it on a strong move on Monday. Okay, let me get you into one that I've been looking at a little bit questionably, and that's Draftkings. So the weekly chart on Draftkings, not so good to look at. Hopefully this will load for us. It is actually an outside bearish candle. We actually have not only a bearish engulfing, but an outside weak candle. Has me a little bit concerned that maybe Draftkings needs a little bit more consolidation. It needs a very strong week this week to try to counteract the potential bearishness of that candle. Now, taking a look at the daily chart, it's still, even with the selling Friday, it did still keep its most bullish count intact. As long as it's above 54.35, we could see a little bit of selling. Maybe that's what would happen on Monday, Tuesday with the potential of or that bearish engulfing on the weekly. But unless 54.35 breaks, I'm going to keep this bullish nested count that has Draftkings going here in the short term up to 80. How about another interesting name in the growth space? So looking in the cloud sector here of FSLY, and what could be a really nice bullish daily candle within this potential bull flag. Now the individual counting, possibly, I'm kind of looking at maybe the need for one leg down. If this is actually just a bear flag, I'm on guard for one more potential low in FSLY, but we're going to see. If that bull flag breaks out first before the move down, then I think that could give you a triggering entry. Okay, so other growth darlings that I think we need to be looking for, have they set important bottoms here? Let's take a look at Roku. So right at its 34-week EMA, it closed just above it on this rail support. And a lot like you saw in SE, on the daily chart, we're going to see closing divergence. So against the closing low of, again, I believe this was March 8th, versus the closing low that was set on Friday, we see about 2.5 weeks, nearly 3 weeks worth of closing divergence. And again, I think that should be good to set this low on Roku. I'm going to be interested because I think Roku has one more leg to an all-time high. And on the short term, I want you to see that we could have already had a bull flag breakout. So a lot like what I showed in Microsoft and Netflix, if we move out of that, back test, and then bounce, that's going to be my entry. Now, of course, on a sub-degree count, there is the possibility. Finish here with TDOC and with TeleDoc. Want to take you into the weekly, and I want to show you this a little bit like Apple, that there might be some names that don't make new all-time highs, and TDOC could be one. I do think it set an important low, but we could just see a B-wave bounce before the resumption of selling at the end of this year. Looking into the daily here on TDOC, again, look at that daily divergence. So just like SE, just like Roku, I think we got a low that was set. I think this is at least worth playing over a few months for that B-wave bounce. And again, to get me interested, I would like to see it. Now, if we see a lower rail touch again, I probably will try to front run that, but certainly a move up and out of that bull channel with a back test and then a move up would get me interested here again on TDOC. Okay, so hope you enjoyed that overview and of the individual names. And also, let me just kind of finish us back here on the weekly S&P. The thoughts that I have here of the possibility of still being on our toes and being on guard. So I'll do my best to point out to you, if we see a bullish blast off, do we get confirmation of NYAD and NYMO? That's going to be my signal that we can expect a continued run for the next few months. But we've just got to be ready. So I think Monday and Tuesday especially are critically important. As always, thanks for the likes and the follows and the comments in the chatter on Twitter and YouTube. I certainly enjoy it. I wish you a wonderful weekend, and we'll be right back at it, I think, with some exciting action on Monday.